Now, the second round of the gold sector wage talks kicked off today, and Forbes Africa managing editor Chris Bishop was in Boksburg, and he joins me now at the desk to unpack the numbers. What happened in Boksburg today? What were the settlement offers that were put on the table?
Well, finally, the offers were made. I mean, we've been waiting for weeks now for the employers were keeping it very much under wraps. But interestingly as well, another thing that was new today was that for the first time, the employers all made separate offers. They used to make one offer between all of them.
And what are these separate offers? The
separate offers is Harmony. They're going to give 7.8%. That's the category 4 to 8 workers. That's the lowest paid. Then Sibanye going to give 11.1%. And then Anglo Gold Ashanti, the biggest of the three, is going to give 13%.
But why the difference, Chris? One would think that what we've seen in the past, this unitary stance on the part of the mining houses, would make better sense and strengthen their position. Why the difference now?
Well, a lot of these offers, they're all down to profitability, and everyone knows Harmony is not making as much money, or if any money, compared to the other two. They're the ones who got the least at 7.8%. Tomorrow, Evander and Village Main Reef are going to make their offers tomorrow, and then there'll be a breakaway for what they call bilaterals. That is, the employers will sit down with the unions and try and explain this offer. And this offer, actually, which the employers, they're very pleased with themselves with. I mean, they're against 180% demands from the unions. And Elise Stradum, the chief negotiator for the Chamber of Mines, thinks that it's the bee's knees.
Well, let's see what Elise had to say on this.
We were very heartened today in the sense that the unions listened to us. We tabled this draft agreement with all these new concepts about sharing the pain, sharing the gain, sustainability. We have, all those and the different pillars. We've also made some offers on accommodation, on retirement. We've made offers on employee indebtedness, on skills development, and but I thought you would be most interested in the wage offers.
Well, certainly she seems very happy about what's put on the table, but she makes an interesting comment there. It's about sharing in the pain and the gain. Right.
Now, part of this offer is linked to profitability and the gold price, obviously, which affects it in all these cases. So what they're saying, two things. The employers are saying if profits stay above 6%, that's after costs have been taken out, then they're prepared to do two things. One, guarantee jobs, no job losses. And two, they're going to also pay bonuses to the workers.
So bonuses will be based on profitability?
Yeah, on the gold price. So that's one thing. But as you can imagine, the unions, we can see there, AMCU protesting. Interestingly enough, they didn't comment today, but they're going to say something tomorrow. But the point is, it's a lot of, it's quite suspect in the fact that the unions say, well, look, bonuses, they're not in our, pay is pay and it's there in your pay packet, but a bonus is not in our control, so we're not that keen on the idea.
So I no doubt that the reaction, although there will be official statements being made tomorrow, the reaction thus far from the side of the unions, 13% being the highest offer, can't be a pleasing number for them.
Well, yes, and we spoke to David Sapunzi, the General Secretary of the National Union of Mine Workers, just after these talks finished, and he was under no illusions whatsoever that he's not impressed.
We have no intention to remain in the boardroom for too long if it doesn't work for us. The indication is that we might not even meet halfway with the employers, and therefore they are pushing us towards a strike. That's something we don't like, but if they push us towards that, we'll oblige.
They are pushing us towards a strike. That's something we don't like, but if they do, we will oblige.
Right, not nice. But anyway, ultimately, but that's what they've got to put out there, because what they feared was that they were not going to get anywhere near 50%, even halfway, and it's clear they're not going to get that in a long chalk. The mines are still pleading poverty. They're saying 60% of the mines are marginal. They're saying something, the analysts are saying 20,000 jobs could be lost before the end of the year because of the troubles of the gold mining industry at the moment. The employers are going to plead poverty, but again, the thing that should worry the employers as well, everyone says, oh, the unions don't want to strike, but you look at it, AMCU last year, they took the platinum mines out for 5 months, cost of 2.4 billion.
Right, and we remember the comments made by Joseph Matundra just last week saying we can beat 5 months. If it takes us 10 months, that's what we're going to do. Can the gold sector survive it, Chris?
Well, this is my point. I mean, I think that if there is any sort of unrest or ructions in the mines at all, but albeit, you know, a long dispute, a strike, I think certainly a lot of the shafts are going to be closed. A lot of the mines, one or two of the mines could go under.
Well, we'll certainly catch up with you tomorrow to get the total picture, to see what it looks like. That's Chris Bishop, the managing editor of Forbes Africa magazine.